Good day. It's another weekend for our weekly analysis where we talk about what happened in the market the previous week and what I expect of the market the previous week and what actually comes to fruition. Today's date is 19th of January 2025, and the analysis for today will be what I'll be watching in the market from 28th to 24th of January 2025. Without wasting much of our time, let's quickly dive into today's business, because I don't want it to be kind of lengthy. So we'll be starting with our bellwether, which is the dollar index. What do we expect of dollar index last week, and what actually comes to fruition? So as of last week, I was interested in dollar index approaching 110 big figure and 110.500. So I was expecting dollar index to deliver 110 big figure and 110.500. So as of last week Monday, 110 has been taken. 110 has been taken by this candle, and the high of that candle so far was 110.176. This was the high of the candle. So I was expecting 110.500. So the market was short of 110.500. So the coming week, how will I be interpreting this? So the coming week, I'll be interested in the market delivering at least 110 big figure again. So I'll be expecting the market to deliver 110 big figure. So as immediately we got to 110 big figure, what is this one doing here? Because I'll be watching the midpoint. Okay, that was the fib I used in measuring the consequence encroachment of this fib of this week here. So I'll be watching the price, how the market price will react to the consequence encroachment of this week. So the consequence encroachment of that week, let's see what level it will fall. So the midpoint of that week, I think that is wrong. Hypothetically is around 109.90 or thereabouts. So I'll be watching the market price gravitating into that level, at least that level, around 109.900 or so. So 109.900. The moment 109.900 gives way and the market price was able to trade above it, then I'll be expecting 110.500. So I'll be making my decision around 109.900 to 110.500. So meanwhile, we're expecting 109 big figure to remain as a support, because as of last week I was expecting it to serve as a support, 109 big figure to serve as a support to the price, which it does beautifully. So now I'll be watching how the market price will react to 109.900, 110 big figure, and then we should see 110,500. So that's what I will be watching for the coming week. But the moment the market price is unable, let me put it that way, if the market price is unable to climb 109,500 and remains there, that means I'll be checking something else. Let's dive into GBP USD. That's our cable. So on cable last week, I was interested in 1.23500 to serve as a resistance. 1.24 on 4,000 to serve as a resistance to the price, and we should be able to see a movement into 1.2373. 1.2373. So 1.732373 is yet to be delivered, while 1.24 thousand still remain the resistance. So as the market is still trading below 1.24 thousand, so I'll still be interested in 1.2373 or 1.2352. So the coming week, I'll be watching how the market price will react to this level here, to this previous week's low around 1.2995. So I'll be expecting 1.2995 to be traded into and taken, and if we should be able to see 1.2352 the coming week, as long as the market price still trades below 1.23 thousand. So 1.23 thousand will be my point of interest, where I'll be expecting it to remain as a resistance. That is that on cable. So we're moving into Euro USD. Euro USD last week I was interested in 1.03500 to serve as a resistance to the price, and we should be able, the market price should take us to 1.01500. So I was expecting this level to remain a resistance to the price, 1.03500, and I was expecting 1.01500 to be delivered, but the market price was short of 1.01500. We only have 1.0177, so that was the low here. So the coming week, I'll be trading with the same premise in mind. Then the easiest and lowest hanging fruit will be 1.02 thousand. So I'll be expecting 1.02 thousand, and if we should be able to go further, I'll be going for 1.01500, while I expect 1.03500 to remain a resistance. So If 1.03500 remains the resistance, I'll be going for lower prices. But the moment 1.03500 gives way, then I'll be going for this relative equal highs, this high, this high, and this high. So I'll be expecting a movement into this CB here. But for now, that'll be what I'll be watching. So then let's go to our NAS. Let's go to our US 500, S&P 500. So an S&P 500 last week, I was interested. In the market price delivering 56.80, I think so. 56.80. I was expecting 56.80. The lowest angry fruit should be 56.80 that I was watching last week. Yeah. But the market price does not deliver 56.80. The market price just took out this sell-side liquidity pool and it repels from there. The market price repels from there. I was expecting this level to be taken. And if we should see enough movement, we should see this as well. But the market has repelled from there. So what am I watching the coming week? The coming week, I will see how you can see how the market price gravitated towards this CB. Those are levels I have on my radar. So this CB here. So the coming week, I will see how the market reacts to that level. Is the market price interested to deliver this high? Then take this high. I've had my eyes on 61,000 for a while. So if you have known, I've been on 6,100 for a while. So 6,100, 6,000, 6,100. I've been on 6,100 for at least over a month or thereabouts. So now, what the market has done, it has done it. So the coming week, I'll be expecting the market price to deliver us into a low hanging fruit, because 6,000 has been taken already, because the eye of this candle comes in at 60.15.30. Yeah. Then the lowest hanging fruit will be this high, 60.20. Then this high here, 60.45.40. So I'll be watching how the market price will deliver 60.20 and 60.34.50. As long as the market price is able to climb this sell side imbalance, buy side inefficiency that was outlined. So as long as the market price was able to trade, as long as it is able to trade above that level, then I'll be interested in the market delivering these highs here. So that is that on our S&P 500. Now let's go to our Dow futures. On Dow futures last week, I was interested in 41,700. I was interested in the market price delivering 41,700 41,600. So I was interested 41,700 and 41,600, and if we should see enough movement, we should see 41,500. So the low of this candle comes in at what? 41,639. 41,639.67. So what does that translate? That means 41,700 has been taken. So 41,700 has been taken. We are left with 41,600 and 41,500. This should remain on my radar. So during the day, this is my buy side liquidity pools. So the coming week, what I'll be watching, I'll be watching how the market price will react in this inefficiency. Okay, sorry. So the inefficiency here, how the market price is gonna react to that level, because there is no form of inefficiency around. Okay, we had a small one here. So we had a small one here, and we have this liquidity void here. Then if you could see a movement above this level, so I'll be expecting, I'll be watching how the market price will deliver. I think 44,000. Let's go 44,100, 44,000, 44,100. So 44,000, 44,100. As long as the market price continue trading above the upper quadrant of this this BC, is a buy side imbalance of sell side inefficiency. So in that same movement here, the same movement we have here, the same movement I have here is equally the same movement I have here. So this is a kind of a balance range. So we have a buy side imbalance here, we have a sell side imbalance here, but the sell side imbalance here has been closed here, has been completely closed. So we have this one has been balanced. The movement here and the movement here has been balanced. We have a balanced price movement around that area. Now we are watching, don't let me use I will be watching how the market price will gravitate into 44,041 and 44,100, because I'll be watching this tiny little imbalance here. So this is where I will be watching the coming week. So let's go into Nasdaq. Last week I was interested in how the market price will react to 28,850. 2850, and if you could see movement into 2700, I think, yes, 2700 and 2600, 2700 and 2600. I think 2500 was also there. So 2700 taken, 2600 taken, 20,500 taken. The only level I have untouched is 20,300 because the market price was unable to deliver 2,400. So 2,700, 2,600 has been taken. Then the market repairs from there. I had known it will happen that way because I have a lot. Even I have my new day opening gap, everything clustering above 2,100. So that is why I normally have all these levels on my charts. So I'll be knowing where to attack fully. Now it has happened the way it wants to happen now. So I have a little area here I was watching as well. It has also been traded into. That is on, I think it's on 15 minutes charts. I think 15 minutes or thereabouts. It's a kind of look at yeah, this. So what does it say? Volume imbalance. So if I should extend this to the right, you will see what I will be watching. Yeah. Now let's go back to the daily charts. Yeah. Traded into yes or no? You can see the level has been taken. That is where I have my terminus. I have my eye on that volume imbalance. So the volume imbalance has been there since on the 7th, 6th or 7th. Now, the coming week, where am I heading? I'll be expecting the market price to at least deliver the consequence encroachment of this BC here. Of this CV, sorry, this is a sell side imbalance, buy side inefficiency. So we need a buy side movement into this level. You should be able to take this high and take that high. If you had a reasonable movement, if the market price still stays above 21,200, if the market price remain above 21,200, so 21,200 will be my support level that will deliver 21,600. Yes, 21,600 or 21,700. 21,600 and 21,700. So I'll be watching 21,600 and 21,700 the coming week. So is it that the market goes for liquidity that is runs above buy stops or run below sell stops, or the market price goes for inefficiencies? So if you observed closely, you would discover my analysis are based on that. So everything happening here was not, none of it met me off guard. Let me put it that way. I was fully aware it's going to do this. You can see all this, the Yoruba will call it winning winning. All these tiny things you're seeing here. These are decision level, these are decision points. These are levels I had in mind and was expecting the market price to deliver. What is wrong with my network? So let's go into gold. Then we go to BTC and call it a day. On gold last week, I was interested in 2700 and 2726. Yes, 2700 and 2726. 2700 and 2726. 2700 was delivered. 2726 was just short of, what was the high of this candle? The high of that candle comes in as what? 2724. Is that not so close? 2724, 70.76. So the coming week, I'll be expecting the market price to find support around this other block here. Let's say 2680, 26. The market price will find support around 2650. Let me put it that way. So 2650, and we should be able to deliver 2726, 2750 if possible, and 2750. Those levels are on my charts. Then if we should see real movement, we should be able to see the market price delivering this level here. If we had 2750, we'll be having 2760. If you have 2750, we'll have 2760 as well. 2760, 65, 70. So that is that. In a nutshell, I have my eyes on this. I have my eyes on this. I have my eyes on this. This is another inefficiency. Source side imbalance, buy side inefficiency. So we need an efficient delivery to that level. But I'm very sure we're gonna take 27, 26 soonest, because it also lies around this CB here. So this CB, the delivery here from the eye of this candle, from the eye of this candle to the low of this candle. So we have a fair value gap around that area. The fair value gap has been closed by this 27, 26. The eye of this candle coming at 27, 26, 16. Yes. The low of this candle comes in at 27, 24, 76. 27, 24. So $27, $24. So this is what I'm showing you. The low of this candle. This particular candle, November 5th, 2024. The low comes in at 24, 27, 24, 76. The high of this candle comes in at 27, 24, 76. Let me show you something. The high of this candle comes in at the high of the candle that's formed on the 16th of January. The high comes in at what? 27, 24, 76. Is that a coincidence? No. So that's the CB here has been completely delivered. The sell side has been delivered, while the buy side has been delivered appropriately, right to the tick. Now I will be expecting this high to be taken, because this high has been taken by this, so I'll be expecting the next high to take this. If you should, because the two are relatively equalized. The moment we take this, we should be able to gravitate into 2750. If you are able to gravitate into 2750, we should be able to gravitate into 2760, 2770 as well. So in a nutshell, that is what I'll be watching, because I'll be expecting how the price would deliver, how the price will react to this other block here. So I'll be expecting how the market price will react to this bullish order block. Then it should give us higher price. I'm talking about price action. So if you should see that, then this bearish order block here will also become a mitigation block. Don't let me dive into that now. Then let's check out BTC. I don't want it to be lengthy, but it's already lengthy. Now, last week, just last week, last week I mentioned 90,000. I mentioned BTC delivering 90,000 and going back into 97,000. So BTC went as far as just some movement short of its 8,000. So 90,000 has been taken already. So 90,000 has been taken. 90,000 has been taken. 97,000 has been taken. What next? Is BTC ready to deliver 110 for us? I have 110 on my radar. Is BTC ready to deliver 110? So I'm expecting BTC to deliver at least 107,500. So 107,500, 107,500, 108,000 again, and if you should see 110, if we should be able to see 110, it will be fine. So 100, you should find a kind of support around 100. Yeah, you should be able to find support around 100, 100,000. So I'll be watching from 100,000 to 110. That is how BTC can move. So at this point, I'll be calling it a day. Thank you for coming this far. Thank you for being part of the family. I really love and appreciate you guys. A quick disclaimer before I leave: I am not a licensed financial advisor. Everything in this video is for educational purpose and educational purpose alone. The fact that I put my own money behind it doesn't mean you have to do the same thing. Everybody now wants to trade the forex, but nobody, not everybody, don't let me use the word nobody. Not everybody is ready to have the knowledge needed for you to survive in the forest market. So everybody is just looking for a shorter cut to extort the market. But don't let me deceive you. It's either you pay the market at the beginning of your journey, or you pay heavily when you have discovered, because when they have already registered it in your brain that you cannot make loss in the market. So when the loss hits you, you might not be able to survive it. You will have, what is it called? You have you don't have the mental capacity to hold the trauma. So this is how I watch the market. This is how I go through the market in the weekend, and what I do in the weekend will decide what I will be acting on during the week. So thank you once again. We really love and appreciate you. Thank you for coming this far with me. We have a very wonderful week ahead, training week ahead. Bye for now.